Hello everyone, George here with another video. And the reason why I've decided to do this video is because frequently what I do is I peruse the different tax software out there openly with my identity, my personal identity, just to see how they work and how they flow. And in turn, when I register with my true name and my real email address, what occurs is I get a lot of marketing material to urge me to use the product again and complete my return and send it in. I can assure you I've done all my taxes. Now, before I go any further, the common disclaimer. 1, I am not a CPA. 2, these views do not necessarily represent the views of my employer. I do these videos purely on my own time, at my own expense, for your entertainment, enjoyment, and some learning. I like to share my knowledge and my expertise, if you may. Going back now to what inspired me to do this video was that I got an email to the effect that how you should decide to go about whether you should do your tax return on your own or seek the advice of a CPA. Back in the day when I first started in this field, there were CGAs, Chartered General Accountants, Chartered Managerial Accountants, and CAs. And now I believe the whole order amalgamated under the CPA title. I want to go on the record and state that I am not a CCA. I'm reiterating again a few details about my background and how I started in tax. I started in tax soon after I graduated from McGill University. I had the opportunity to become a quote-unquote financial advisor and sell mutual funds and life insurance. Instead, I took the H&R Block tax course. I stayed there for 10 years. I did a lot of research in tax. I did a lot of practice in tax. At one point in the high point of my career, I had up to 600 clients a year. I also taught tax as an H&R Block instructor, not a teacher, an instructor. There's a difference, right? Now, having taught the course to several individuals at the basic and intermediate level, I got to know a lot of people. And one of my students actually, 10 years after my long, illustrious career with H&R Block, recommended me to work at Deloitte. I worked at Deloitte for 6 years, approximately 6 years, in the expat practice. A shout out to Terry Spadorcha and Maria Atsadas, some of the best accountants out there in Montreal, and Mr. Albert Baker, if I recall correctly, he is a CPA fellow and one of the top tax experts in Canada. Then after that, I went to Ernst & Young, and while I was at Ernst & Young, I developed a curiosity about tax and technology being software. And that's where, at that point, I decided to go and join Dr. Tax. Dr. Tax was taken over by Thomson Reuters, and here I am now. And at Dr. Tax, I initially started in research, in the research department for T1, and then took over the responsibility of quality assurance. So, what triggered me to cause this video, to produce this video, was that the reasons they gave as to why you should pursue doing your tax returns on your own as opposed to seeking a CPA were purely for marketing purposes. I couldn't buy into the reasons. I'm not going to mention who had sent the email, what company had sent the email, and go into exact detail, but I thought I would share my opinions as to why you should either consider doing it on your own with a tax software package or pursuing a CPA. So there's only two slides in this video. Okay, I hope not to rant for a long time, and I hope that you'll find the knowledge and my opinion interesting. So let's go on to the next slide. All right, let's start with reasons to seek a CPA. All right, number one reason, and perhaps I haven't listed them in the order of importance, but as far as I'm concerned, they are all important. Okay, so number one reason that came to my mind was you need support for your residency status. Now, what does that mean? It means that if you're planning to go abroad for any reason, and you are considering going abroad for a considerable amount of time, and you're uncertain as to whether you return, you should probably seek the services of a CPA. Now, the amount of time that you'll spend abroad may not necessarily be of importance. What is of importance is to ascertain what will be your residency status while you are abroad. And that is a subject all in itself, but you need to ascertain and document this proof so you can determine whether while you're abroad you will remain a resident of Canada and be taxed on your worldwide income, or if you are in fact giving up your residential ties and taxed on your Canadian source income only. So like I said, that's a subject in itself, but seeking a CPA in that instance makes sense. Seeking a CPA that is experienced with expat taxation makes even more sense. And the key that you need to look for that you are being served properly is that the CPA will take the time to ask you all the right questions and put them down on paper or a legal document, or document them electronically, and then come to a reasonable conclusion and can tell you, yes, you are a non-resident. These are the reasons why, and I will support you should the CRA or Revenue Quebec decide to challenge the status. So that's very important. Second reason that comes to mind why you should seek a CPA as opposed to doing your taxes on your own. You have allowable business investment loss. That is a deduction on your income tax return. I'm not going to go into very much detail with respect to each of these items. I'm going to go over at a high level, but I want you to do some research in addition to viewing this video. So, allowable business investment loss. In my experience, for a quarter of a century or more in tax, this is an item that the CRA likes to challenge. It is a sizable deduction. Basically, what an able is you've lent money to a corporation, and that corporation has folded, and there's no way you can recover this loan. You're allowed to claim it as a deduction. That's the high level of it. Being able to claim this able deduction, it needs to be well documented again, substantiated that you are eligible to it as per the Income Tax Act of Canada. So when the CRA processes, assesses your return, or decides to challenge it, you have all the proof that you need to substantiate it and even defend it in a court of law. Great. Preoccupied with trading activity. Now, that goes back to the previous video that I've done where the CRA can come back at you and say, oh, this is not capital gains, this is business income. So if you are preoccupied with a trading activity, whether that is buying and selling cryptocurrency, buying and selling securities, buying and selling automobiles, homes, you need to establish if this is a business activity or not. Again, this requires documentation. This requires knowledge of the Income Tax Act and building a case for whatever choice you have. Now, the category to that is farming. Now, what am I saying? Is farming too complicated to do on your own? No. If you have a simple farming operation, great, no problem. Where are the pitfalls in farming is if it is not your principal source of income. Now, if it's not your principal source of income, if it's hobby farming, your losses may be disallowed by the CRA, and in which case you can only carry forward losses and not claim them against regular income. If there is a mandatory or optional inventory adjustment, and you are not capable of managing all the entries and all the required proofs, then you should seek a professional CPA. There is a lot of case law out there where the CRA refused farming losses, claiming that the taxpayer was in fact not in a business but conducting a hobby. And there have been challenges to that. The challenges required either a lawyer or a CPA. So if you're not comfortable doing your farming income and expense statement, sure, seek out a CPA. There are a lot of specialists out there that concentrate on farming alone. Bankruptcy. Now, that of all the items I mentioned should be number one on your list, okay? Why is bankruptcy important? Because in a year of bankruptcy, you have to produce two returns. The first return, the pre-bankruptcy return, has to be done by a professional, and it has to be usually the trustee that does it. Okay, the post-bankruptcy cannot be done or completed without the pre-bankruptcy copy. Whether you're doing it on your own, H&R Block, or CPA, that person needs a copy of the pre-bankruptcy return. There are a lot of special rules with respect to bankruptcy. Now, UFile, with UFile, I'm not sure if you can do a post-bankruptcy return. I'll have to circle back and confirm. But long story short, bankruptcy involves a lot of special rules, not as per the Income Tax Act of Canada, but as per the Federal Bankruptcy Act. So you can imagine credits changing from one year to another. I mean, new credits being introduced. How are they treated in the year of bankruptcy? Are they allocated to the pre-bankruptcy return, the post-bankruptcy only, or proportional to each portion of the year? There are two taxation years in the year of a bankruptcy. So be careful with respect to that. Second to last is your time. Now, if you have been doing your tax return for the longest time ever, you don't mind spending an hour or a weekend trying to compile everything together, making sure that you've done your job correctly, great. But if you're pressed for time, there's no harm seeking out a CPA or a professional, right? Now, price. I've heard of prices below $100. Last I heard, H&R Block is charging $100 and more. I can tell you for a fact, while I was in practice with a professional firm, the cost of doing a basic return was not less than $1,500. So it can vary, but it's not uncommon to hear about a cost of $1,500 or more to do a return with a professional CPA. Now, CPAs out there, feel free to disagree with me. I know your pricing might be different and a lot less or more cost effective. Well, I did say that I am saying, though, it's the cost that the CPA charges less the value of your time. So if your time is valuable and you'd rather have someone else do it, by all means, go ahead, right? Okay, now, reasons to do your return on your own. Well, you have a straightforward situation. Employment income, RSP, medical donations. And believe you me, even if you do have a complicated situation where you have an able, you have a farming statement, there are individuals out there that feel at ease to do it on their own, and by all means, you're welcome to use UFile or your favorite tax software to do it. Social assistance, well, if you're on social assistance or have any non-taxable income, rather than incurring the cost, an exorbitant cost of having someone else do it for you, there are a lot of free programs and a lot of assistance out there for you to do your tax return. There is the UFile, of course. There is CVITP that uses UFile to help people in marginalized situations or people that are on work leave and collecting workers' benefits that can help you. So seek out help and make an attempt to do it on your own. Situations aligned with your normal year-to-year activity. Now, having been in practice for 25 years, I can tell you safely what that means. What that means is most people do not deviate from their taxable activity from year to year. At least that's the observation I've seen. And what that means is if a person is working, donating, incurring a certain amount of medical expenses, their situation does not change year to year. And usually, if it does, whether they suffer a serious setback in their relationship, their spouse or common law partner left them, or they bought a new investment, they're more than eager to talk to you about it. Nonetheless, it's important for a CPA to ask, every year, has your situation changed? Have you purchased a property? Have you purchased a new investment, a rental property? Did you dispose of an investment? All these questions are required to be asked of you. And that's another consideration whether as to whether you should go the CPA route or do it yourself. However, if your situation remains the same from year to year, you can always use your last year's return as a reference, and you can build on that to do this year's return. Okay, you are at ease to complete the return given your tax knowledge is reasonably well. And I can tell you for a fact that there are a lot of people out there that have been doing the same activity. For example, artists that are familiar with their tax situation, their taxable activity, to the extent that they even know how to value their inventory. And they do that simply by reading the guides that are available to them, which is great. So if you are at ease with completing your tax return on your own and you have reasonable tax knowledge, go right ahead. Go ahead, use UFile. Now the price of that other product for a DIY, I'm giving an average price about $30. Okay, depending on what product that you use. They were using a price range of about $65 for a product that is pay what you like. Kind of generous in that respect, I suppose, but I'm speechless with respect to that estimate. I'm saying about $30, give or take 20, plus the value of your time. Again, if you're going to give up a weekend to do this exercise, do you really want to? That's, subjective. It's up to you. Now, whatever you decide to do, go ahead and do it. Be decisive. Take the bull by the horns. Carpe diem. April 30th is around the corner, so I wish you all luck with this year's tax season, and be well. If you have any questions or comments, comment below, like and subscribe. Thank you so much. Take care.